Okay, peeps, welcome back. So today we're going to be going over the YieldMax fund of funds distributions and also the roundhill weekly distributions. And yeah, they came out pretty good this week. So with that being said, let's get it. So the first thing I want to point out is that the roundhill xdte and qdte are weekly distributions. They're not monthly like the YieldMax ones. So we're not going to cover this every single week. But because these two lined up, we're going to go ahead and cover it here. So let's go ahead and go over to the YieldMax dividends here. As you guys can see, this is the ETF fund of funds. So the posting date here was the 16th. As you guys can see, the payment date is going to be on the 19th. So if we look at the calendar here, that's going to be on Friday, so before the end of the week, which will definitely be nice. X date is tomorrow, so if you haven't picked any shares up, well, by the time you see this video, the market will be closed. But those of you guys that have known about these funds for a while, you know that the X date is today. So anyways, if you haven't picked them up before the X date, just know that you'll get another chance before roughly about this same time next month. It's not the end of the world. You know, it's not going to be like, oh, God, I'm never going to be able to buy again. That's not what this is, okay? So you just simply missed out for this month. There's plenty of other options out there to, do the dividend capture strategy on before the X date that's coming up most likely before the end of the month, like FEPI, for example, or the Curve Invest ETFs. So anyways, today's the last day to get in before the X date. If you buy tomorrow, you won't get paid dividends for those until next month. So YMAX, which is the only one of these three that we actually own, had a pretty good distribution. It's 36.5%. Is it anything crazy like Coney or Tesla or anything like that? No. But the lower distribution rate and lower per share dividend does kind of offset the NAV erosion. So still pretty good dividend. Just, the NAV erosion is clearly not showing as much. So nice, good, solid balance between yield and price appreciation. So 63 cents per share on this one. As you guys can see, YMAX is only $20. So 63 cents on a $20 stock is exceptional. I think it's JP Morgan Chase is like a $200 stock right now, and they pay $1 per quarter. So you'd be investing $200 to get 33 cents a month compared to, that's for one share. Compared to if you invested the same $200 to get 10 shares of the YMAX fund, you would get roughly about $6.30 per month. So huge difference on that. Not that there's anything wrong with JP Morgan Chase. I mean, it's a big bank, it appreciates over time. It's a dividend growth stock, all that kind of stuff. But just two very different styles of investing. So the second one here, YMAG, this is just so you guys know, YMAX is a culmination of, I believe, all of the YieldMax ETFs. So you got Tesla, Coinbase, NVIDIA, Apple, Microsoft, on and on. You got C3 AI, MicroStrategy, all of them into this one fund. So a lot of diversity. And as for the YMAG, well, the MAG part stands for Magnificent Seven. So basically YieldMax Magnificent Seven Fund, which holds the 7 tech stocks: Tesla, NVIDIA, Microsoft, Apple, Amazon, Facebook, and Google. And with this one, you get 36.5, a little bit higher than YMAX in terms of yield, but also the dividend payment is a little bit lower. That's probably because the share price is a little bit lower, but still really good. I mean, if you had 100 shares of YMAX, you'd be getting $63 a month. If you had 100 shares of YMAG, you'd be getting $62 a month. If you had 100 shares of each, you'd be getting about $125 a month. So not too shabby. And I think to get 100 shares of each is like $4,000. So it's actually not bad. So ULTY, this is their more higher yield ETF. As you guys can see, the yield on this thing is pretty nuts. So it's 103%. It's up there with Coney and MSTY and stuff like that. But you guys know that we're investing in Coney and MSTY because of crypto, not necessarily because of the distribution. It's more so about the crypto cycles. And for NVDY, and TSLY, the reason why we are investing in that is because of AI and, future technology and stuff like that. It's not necessarily just because of the yield. So 103% on this one, $1.41. Again, if you missed out on it before the X date, that's okay. You'll have another month to accumulate if that's what you want to do. So really great yields this month. We're actually going to go over what those are going to be for us here in a minute. So this is the roundhill. We'll go over the qdte and xdte. We do know about YBTC, but we're not going to cover that in this video. So that's basically their Bitcoin fund. So anyways, we go down here to the declaration. As you guys can see, it was much higher this week, so 26 cents. So yeah, based on this pattern here, I would say that it's basically don't have any expectations as to what the payouts are. Just understand they could vary pretty substantially. It, of course, depends on what the market does. So as you guys can see, it wasn't that much last week. It was 9 cents. And then this week is 26 cents. So it's a lot more. And again, the X date is also tomorrow. So if you missed out on this, well, that's okay, because the next X date is going to be basically a week from tomorrow, which gives you a whole week to pick up the shares if that's what you want to do. And we have a whopping 1 share of this so far. So do plan on accumulating more at some point, just probably not at this current time. So let's go over to the next one here if I can find it. Let's see, ETFs. There's YBTC. We may cover that at some point in the future. We're just not going to do it right now. So let's see, xdte. This is the other one. So this is basically the S&P version. The qdte is the NASDAQ version. So same thing on the X dates. If you missed it this week, then you'll have a chance to get it next week and the week after that, and so on and so on. So again, last week it was only 2 cents. This week is 19 cents. I would say the best thing is to not have expectations and just to kind of, just understand that the dividends could vary pretty substantially. There's no real consistency here, but 20 cents for a week, which is basically 80 cents for a month on a $40-something stock, is not a bad deal. If you ask me, that's actually a pretty solid dividend. So that's for the roundhill funds. So now we'll go ahead and go over our YMAX position. We did actually buy some today. We're going to show you that right now. So the entire market is down right now. I mean, pretty much everything's getting pummeled between inflation expectations and the Fed, the possibility of the Fed not cutting rates this year, and the issues between Israel and Iran, and all that is kind of causing a lot of FUD in the markets, and markets are tanking as a result. So as you guys can see, the last couple of days, we bought considerable amount of shares of these. So as of right now, 66.85 shares. We go back over to the dividend yield here. So 66.85 times 0.631. Actually, we'll just call it 632 since that's pretty much close enough. So we're going to get about 42.25 for this month. So that's pretty good. The next distribution that's coming up in terms of the high yield ETFs is, of course, the roundhill funds, but also the FEPI ETFs. We'll cover FEPI in a later date when it becomes more relevant. So pretty good yields this month. Now, in terms of how it's performed against the market, so I think this is important for people that want to know that they want to know basically, is my share price going to go up or down, right? So based on what we can see in YMAX, when this thing goes up, or I should say when the market goes up, the fund goes up with it. And when the market goes down, the fund goes down with it. So as you guys can see here, YMAX, market goes up, YMAX goes up, market goes down, YMAX goes down. And of course, we pointed out to you this before, that we have had a MACD death cross. We've only seen this once per year for the last 4 years. I know it sounds weird, but that is actually the truth. So SPX, same thing. Russell 2000, same thing. This is the MACD right here, as you can see, and it's on the weekly time frame, and of course the Dow Jones. So if we take a quick look at something like YMAG, so this one's been a little bit more flat. Again, I think the diversity has in the YMAX ETF, which is the reason why we only bought that one, is the reason why the prices been going much more so up than sideways or down. Again, YMAG is only 7 stocks. That's the MAG 7. If all of the MAG 7 are getting beat down at the same time, well, this fund's going to underperform a little bit compared to YMAX. Not that it's a bad fund, it's just more tech concentrated. And if we look at ULTY, which is the other one, as you guys can see, the value of the fund is going down pretty substantially, not just because of the massive yield, but also because of the fact that the markets are now selling off. So definitely something to consider. I think that's one of the reasons why OARC has not been as bad. I mean, it is pretty far down there, but it has not performed as badly as, say, something like Tesla, because again, OARC is based on an ETF. It's not based on a single stock. So that's just something to keep in mind. So now we take a look at qdte and xdte. So this one, unfortunately, does seem to be going down. But again, do understand that the NASDAQ is very volatile. Again, S&P is going down. But you guys are probably wondering, why is this? Well, it's quite simple. As you guys can see on... so let me see here. Which one is this? Okay, so this is the NASDAQ one. So this is relevant. So I really got to zoom out here for this. But as you guys can see on the left of the chart, the qdte fund came out roughly around the time that the NASDAQ was topping out. As you guys can see here, we're hitting our head on resistance for weeks on end. And that, combined with the massive dividend payouts, of course, are leading to price drop. So the price of this fund will go up when the market goes back up. But as of right now, it looks like the market might be trying to enter into a correction. Don't quote me on that. This could, of course, be a massive fake out. We could just go straight back up in a couple of weeks. It's hard to say, but as of right now, it does look like the market wants to drop a little bit. So yeah, I did actually not want to do that. So xdte, and then we'll go over here to the S&P 500. Since these are the relevant, what do you call them? The relevant indices. So again, on the roundhill, basically they created this fund roughly around the peak of this move on stocks. Well, I'm not going to say it's the peak. I mean, it could just be a fake out. It could be a correction. I doubt it's going to be a bear market. We've gone over this before as to why it's probably not going to be. But again, pretty much just the fund is moving down as a result of the indices topping out short term and having a slight pullback, which again, as you guys can see, based on previous price action going back to the rip that we had starting last year in October, I mean, this thing has been basically nothing but straight up for almost 6 months. To be completely honest, I would say it's actually healthy that we pull back like this, and even necessary if we're going to go higher in the following months. So anyways, this is our video on the YieldMax ETF fund-to-fund dividends and also the roundhill funds. So hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.